Hello and welcome to Elevate Your Wealth. I'm your host, Casey Elkins, co-founder and managing partner at Elevated Financial Management. We have got a really exciting show for you today. We're talking about everybody's favorite subject, which is taxes. So you don't want to change the channel. We're going to talk about how taxes affect your retirement and what that really means for you, and more importantly, what you can do about it. That's the key point. As always, I'm joined by my friend, father-in-law, and business partner, Mark Stimson. How you doing, Mark?
Doing good, Casey. I'm excited, like you just mentioned, about our show today. I think this is a subject that causes a little bit of stress and anxiety in everybody's life. There's a lot of uncertainty right now. We know the current plan is due to sunset, this December. So we do believe most likely, especially with Trump in office right now, that he's going to address that. And it's good. Probably something done before the end of the year, but we just don't know. That's the problem. Uncertainty creates anxiety, right? And in today's show, we're definitely going to be talking about some things that we can do no matter what happens with maybe the changing of tax brackets and some of the other capital gains changes that could come about, which are going to affect everybody to a pretty big degree. So we want to pay attention to what is happening in this regard, because we believe and we know that the two biggest eroders of our clients' retirement portfolios are going to be taxes, number one, and inflation, number two. So we've got to have a plan for that. Now, the market volatility that comes and goes, right? But taxes can create some issues if we don't have a plan.
Yeah, it really does have to be part of the plan, right? It does. It's got to be built in because it's really not about what you make, it's about what you keep,
exactly.
Right? And so if you're thinking of retirement and you're building a plan based on the value of your account and you're going to take out a certain percentage or something like that, and you've got your Social Security or maybe a pension, right, if you're fortunate enough to have one, those are all great things, but that gross number, right? Just like your earned income for the year, that gross number is up here, but your net income is much lower. And so those taxes have to be factored in because that really does have a massive impact on retirement planning. And it's something that we see all the time gets missed in plans that other folks put together, or maybe not quite missed, but overlooked, I'd say, simply because they're not supposed to be talking about taxes at a lot of these other places, right? They're not allowed to. Their corporate structure doesn't allow them to plan for taxes for you. And yet, we really take the opposite approach, that has got to be built into the plan for it to be effective. So I think we can see why it's so important, right? But maybe before we get in, I know we've got some stories of clients and some details that we want to share. Maybe before we could get to that, we could discuss where we think taxes are going, right? Because there's a little controversy there, right? But I think it's important for us to really try to shed some light on where we think taxes are going to be in the future.
Yeah, in fact, one of the things that we do is we teach it for the local colleges in our area, and we have a whole section in our classes that we do on taxes and what we think is going to happen. I think if we're all being honest with ourselves, and all you have to do is look at our national debt load. It's massive. In fact, it's probably over $1 trillion right now just to take care of servicing the bond interest that's due on these things. So debt has gone way up. I think we're pushing or a little over $36 trillion now. That's a number that Casey does a really good job of showing or trying to have people understand the difference between a million, a billion, and a trillion. And it is a staggering difference. And so with the debt being as high as it is, taxes have to go up. They cannot go down. That piper, you might say, has got to be paid. And he's coming. And what's going to happen, I think most of us would agree, we're probably not going to like it very much. It's going to be something we're all going to be a little disappointed in. We're going to have less, as you mentioned, in our pocket at the end of the day. And that's why having a plan, and I give Casey a lot of kudos on this. He helps design our structured income plan. We call it the SIPS report. And in that, we put a specific column in there that's going to deal with each client's taxes and let them know approximately, we don't know exactly, because unless we do their tax return, exactly what their tax liability is going to be. But we want to have a plan for that, because that is going to help each and every person to be able to figure out what's going to be kept in their pocket. You've got to do something when it comes to tax planning.
Yeah, it's really important. And I think maybe just to even start at a base level, the reason that we talk about this as much as we do is, one, because it's important, obviously, right? But two, when you think about your retirement savings, what you've got built, your nest egg for retirement, where have you saved most of the investments that you've got? For most people, the answer to that question is a 401k or an IRA or a 403b or something along those lines, deferred compensation, a plan where you have yet to pay taxes on those dollars. And so what it really boils down to, as Mark was mentioning, is simply that Uncle Sam wants their tax dollars, and guess who's got it? It's you. So they're looking to your retirement accounts to fund the taxes that are needed to keep things rolling, right? And it's an easy target. That's the reality. And we've shared this story before, but you have a silent, hidden partner in your 401k. All of us do, in those tax deferred dollars, because you knew what the taxes were when you were putting the money in, but nobody told you what the taxes would be when you started taking the money out.
Yeah.
And the reality is that silent partner gets to change the tax rules whenever they feel like it, right? It's totally up to them, right? And so it's kind of like trying to play a game where you don't have the rules. Could you imagine trying to play Texas Hold'em and you don't know what the rules are? You don't know what the winning hands are. You don't know how the game works. That would be a nightmare. And that's what we see a lot of people doing, right? Is they're approaching retirement and have not given true consideration to how the game of taxes is played, to how those taxes are going to affect their retirement. And so, this is a big piece to the puzzle and one that we really can't overlook. And so that's why we include it, right? When we do an analysis for people that give us a call from the show or from radio or come to a workshop that we teach at the local colleges. Mark, maybe what you could do, we've got a couple spots open. Maybe you could let the audience know what to expect if they give us a call.
Yeah, if you're concerned about what we've been talking about here, taxes, please pick up the phone and give us a call. We want to look at your tax situation based on your individual circumstances, right? So please pick up the phone and call 844-342-7142. That's 844-342-7142. And I want to assure you, all we're going to do is have a conversation. You're not agreeing to become a client. We're not agreeing to take your situation on. But we just want to maybe find out how you're being affected by different things, your income, all of these different things that you have questions about. Again, pick up the phone and give us a call. That's 844-342-7142.
Thanks for sharing that with the audience, Mark. As Mark mentioned, feel free to give us a call. It's complimentary, no obligation. You can sit down with myself, with Mark, with our team, and we will put together a custom tailored plan for you. Don't change the channel. We're going to talk more about taxes and what can be done to hopefully improve your tax situation in retirement right here on Elevate Your Wealth. Call 844-342-7142 now to receive your complimentary tax map with your written financial plan. Learn multiple strategies that can protect you from higher taxes now and in the future. Taxes are a threat to your financial stability in retirement. Protect yourself from the potential threat of rising taxes. As a retirement planning financial advisory firm, Casey, Mark, and the team will help you navigate the financial waters to pursue your retirement goals. Call 844-342-7142 today. Casey, Mark, and the team offer inclusive retirement services, such as investment directives for your portfolio, income-producing strategies, and wealth preservation plans for your family and legacy. Call Mark Casey and the team at 844-342-7142 right now for your complimentary tax map with your written financial plan. Discover tax strategies to keep more of what you have saved in retirement, or use the QR code below to schedule today.
We know the market is going to get worse from here. This is the biggest monthly decline in 10 years. People's 401ks today.
Well, my investments are tanking. My retirement isn't going as planned. I can't believe I let my kid talk me into buying crypto. I mean, what is that anyway?
This was the fourth worst contraction in history.
So how are you two doing?
Your financial future doesn't have to be uncertain. Plan your retirement right. Call now for your own complimentary portfolio review and tax analysis.
Hello and welcome back to Elevate Your Wealth. Again, I'm your host, Casey Elkins. I'm joined by Mark Stimson. Today we're talking about taxes and the impact that that can have on your retirement. And there's a lot of misinformation out there. There's a lot of even just new information that's hard to decipher what is accurate, or more importantly, if it is accurate, how is it actually going to impact you? That's the big question, right? Is what does this type of information mean to me and my retirement? So we want to talk a little bit about taxes on Social Security. Security for the next couple minutes here. And so, Mark, maybe share a couple details about how Social Security is taxed and what the future of that looks like, right?
Yeah, this is something that a lot of us that are on Social Security have a major concern about, right? That there's been discussion now that our current administration would like to get rid of tax on Social Security. Now, I happen to believe that that would be excellent because it's a double taxation, right? We've already been taxed on our Social Security, and there's basically 3 brackets when it comes to tax on Social Security. You could be in the 0% bracket based on your income. You could be in the 50% bracket,
right,
or you could be in the 85. The reality for most of our clients, if you have joint income over $44,000 a year, you're going to be taxed at 85%. You're going to have to, I should say, have to declare 85%.
Right. So you don't pay 85% taxes, right?
Yeah.
It's 85% of your Social Security is taxed, right?
Based on whatever income bracket you're on,
Sure.
right? But it still can add up to quite a bit, right? So again, and I have a client that I think of when it comes to this because he didn't realize when he turned his Social Security on before he was full retirement age, or you'll hear us say the word FRA, full retirement age, that there was also an earned income test that he had to worry about. Meaning if he made over the threshold for every $2, and let's just use 23,000, that's pretty close.
Yeah.
This year it's a little higher, but for every $2 you make over $23,000 a year and you're not of full retirement age yet, you have to pay back if you turn Social Security on 50%. It's a 50% penalty. So that is a pretty massive penalty. So we want our viewers to understand there is some complex tax issues that you need to understand when it comes to Social Security. You don't want to wing it because if you do, you may end up, and we haven't even brought up the IRMA, right, based on income that's going to affect your Medicare premiums, right? So there's a lot of planning that needs to be done with taxes when it comes to Social Security and Medicare.
Yeah, it's really important. And again, right, we mentioned that misinformation, and we've heard a lot of folks thinking, and you know, they got the information from somebody, I think, with good intent, right? But the information was passed along that, oh, well, no, your Social Security isn't taxed. That's not the case, at least not yet, right? Maybe as things move forward, right? But at least that's not the case yet. So that's some misinformation. Something that I saw the other day, right? Because now it seems like everybody on social media is an expert on everything, right? You can find an expert on anything when it comes to social media, right? And so there's a lot of financial experts, right? Or people that are at least willing to give the advice on social media. And I saw something the other day. Somebody was indicating that as long as you held your 401k account, if you didn't take any money out of your 401k until you were age 63, then that meant that you wouldn't pay any taxes.
Yeah.
That is not the case, not unless you've saved in a Roth 401k, right? If that is the case, well then, gosh, there's been some bad financial planning going on for quite a while, right? So
we should fire ourselves.
Exactly,
if that's the case. We should fire ourselves.
But that's just not the circumstance, right? And we know that. And so, you know, this is where I think it's so important that you pay attention to where you get your information from, right? The reality is that the internet is a great place and there's a lot of great information there and there's a lot of misinformation there and a lot of bad information. And so you can find something on the internet to support any type of thinking that you may or may not have, right? And so we want to make sure that when it comes to retirement, and this next chapter of your life, something that is going to define your life essentially, that you are getting information from a trusted source that understands what they're doing and not only is focused on managing investments, but like we're talking about today, how are taxes going to affect those investments once you start taking money out, right? How is all of that going to play together with your Social Security and how your Social Security is taxed and Medicare and long-term care, right? There's all these different facets. And it can be overwhelming, right? It can be a lot to handle.
Yeah, in fact, you mentioned something about where we get our information because one of the things we've seen over the last several years, we've had clients that have called Social Security themselves and talked to somebody. I have a specific situation with a client that was told not to turn on her survivor benefit, right? And was told that by the Social Security office, the local office in Kent. And so this is very, very dangerous. And you would hope that you could trust the organization that is giving that money out to individuals.
Essentially the
government.
administrator,
Yeah,
right?
it's the administrator of the plan. They're telling them not to do something that was completely opposite of what the truth was. And she missed out on over a year's worth of benefits because she trusted the information. What's happening is a lot of people, you might say lower down on that scale, working at Social Security offices, they shouldn't be giving out information. They're actually, by law, not supposed to, but we find that isn't the case. Now, if you get an appointment and you're talking with a supervisor, that's totally different, right? But we need to be able to trust them. The problem is right now there's a lot of misinformation being spread, even by that office, that can cause individuals to make a decision that could cost them tens of thousands of dollars had they really known what the real rules were all about. So again, watch where you're getting your information.
Right. And I think in that specific circumstance for somebody that we were working with, she missed out on thousands of dollars of Social Security.
It was a whole year's worth of benefit.
Yeah. And there's no way to go back and recuperate that. There's no way to go back and prove that's what she was told, right? There's really no recourse, right, for that. So she's just kind of left holding the bag, as it were. And so that can be really complicated. And that's where a written financial plan comes into play, right? To make sure that we have everything that we need, all our ducks in a row, and that more than anything, a lot of what a financial plan does is it lessens the anxiety that you feel when you're trying to make these types of decisions, right? I think everybody understands that as you're trying to make decisions for retirement and where to pull money from and how taxes are going to play in all these different things, that it's kind of like dropping a rock in a pond. Every decision you make is a rock dropping into a pond, and that has a ripple effect on all the other decisions that have to be made. And so we really can't make a singular decision like in a vacuum, because it does impact the other decisions that we have to make. And that's where a plan comes together to make everything cohesive. And so that's why we offer a written financial plan each and every single week on this show. That's why we offer it on our radio show. That's why we offer it at the workshops that we teach at the local colleges, is because we know that this is what people need to be successful in retirement. So if you would like to have that conversation, you see the number on the screen, 844-342-7142. Our team will sit down. We will have a one-on-one conversation to design a personalized written financial plan just for you. We'll talk about taxes, Social Security, the risk that you're taking in the market, what type of income you can expect in retirement. All those questions that are swirling around in your mind, we will do our best to answer those for you. So don't hesitate. You see the number there, 844-342-7142. Again, this is a written financial plan, no obligation, completely complimentary. You leave your checkbook at home. We're going to talk more about taxes and Roth conversion when we come back right here on Elevate Your Wealth. Call 844-342-7142 to receive your complimentary written financial plan and Social Security optimization report. Get the most from Social Security payments. Find a strategy that maximizes your Social Security benefit and preserves the assets you've saved for retirement. Social Security seems easy, right? The question is, should you take it now or later? There are numerous ways to take Social Security. The decisions you make can also affect how much you pay in taxes. You've paid into Social Security for decades. Now you want to make sure you optimize your retirement income. Call Mark Casey and their team at 844-342-7142 for your complimentary written financial plan and Social Security maximization report. You need a retirement income plan that accounts for all your assets. Call Casey, Mark, and their team right now at 844-342-7142 to receive your complimentary written financial plan and Social Security maximization report. Or use the QR code on the screen to schedule your appointment today.
You've got quite an extensive resume. Wow, so many years of management. Bet that was fun. So this job requires basic knowledge of the social media and video platforms, content creation, and SEO. How proficient are you in those areas?
Going back to work after retiring is not ideal. Plan your retirement right. Call now for your own complimentary portfolio review and tax analysis. Hello and welcome back to Elevate Your Wealth. I'm your host, Casey Elkins. We're talking about taxes today, how they affect your retirement, and what can be done. So we want to get right into it. I'm here with Mark Stimson, my partner, and we're talking about Roth conversions now. So Mark, maybe share a little bit, what is a Roth conversion? How can that benefit somebody?
Yeah, this is a great subject because this is important for all individuals that may be trying to do some tax planning. Now, what I want to say right off the bat is a Roth conversion specifically going to benefit you? We absolutely don't know the answer to that, right? We've got to get a lot more information because there's a lot of confusion sometimes about a Roth conversion versus a Roth contribution. Many individuals that have a pretty good wage are not allowed to contribute to a Roth each year because their income is too high. There's some other tools that can be done that can act like a Roth on steroids, but we don't have time to get into that right now. But the point is, a conversion, though, there is no income limit. So depending on your tax bracket, we like to do what we call tax stuffing. Bracket stuffing, right? If we've got $100,000 to keep a client possibly in the same tax bracket, then we could take some of the IRA money, the non-tax money, put it in and do a conversion and keep them in that very same bracket. Even if a client is in a 22% bracket and we move them to the 24, you're talking only 2 percentage points, right, as it stands right now. So again, that conversion, if you do it, can work wonders if you have enough, what I call runway, we call it runway, or time frame before you use those dollars, because that money now becomes income that is tax-free. But each person's situation is very unique to them, right? We don't know if it should be right for you or it's wrong for you. We don't know. But it can be one of the most powerful tools to help reduce taxes in the future. And there's been some discussion that they may get rid of the Roth altogether. And if that happens, I feel bad for those that could have taken advantage of that, but they didn't. And now it's gone, and it'll be gone forever, right? We know where we're at tax-wise. So that's something I want our viewers to think about. This Roth situation may not be with us forever. And if it goes away, you're probably going to kick yourself that you didn't do some conversion when the opportune time hits you financially and where we are with the tax code right now.
Right. And there's a couple other things to understand with that Roth conversion, right? Is you're really biting the bullet because you have to be willing to pay the taxes today.
Yes.
And so oftentimes people will think, well, won't I be in a lower tax bracket when I retire? That may be the case, right? But there's a good chance that it may not be because the reality is if you're going to be in a lower tax bracket, then you're probably living a lesser lifestyle in retirement, right?
Yep.
And most of the time, that's the opposite of what people actually want, right? If you've sacrificed and built for 40 years, you probably want to go at least have the same lifestyle in retirement, if not be able to travel more and do things a little differently than you had been while you were working. So we think that's kind of a fallacy that income drops in retirement. Now, if you pay your house off right around the same time, then that can work, right? If you pay your house off right around the same time that you retire, then maybe your income need is a little bit less. But again, wouldn't you rather have more income than less, right?
Yeah.
That's really what it comes down to, right? That's financial freedom. Now, we do have a tool that we've put together. It's a website. It's called taxbillseattle.com. I think you'll see it come across your screen here. There it is. You can scan the QR code. And that'll take you directly to Tax Bill Seattle. And what this will do is it's a tool that will allow you to sit in the comfort of your home, put in a little information about your individual situation, and see what the potential is of doing a Roth conversion and see how that might affect you. Now, we're going to give you one caveat to that, is that this is just a calculator to help you see what it could do. The question becomes, how does that fit into an overall financial plan? That is one piece to the puzzle, but really it takes a plan to make that Roth conversion truly be successful. So taxbillseattle.com, you see it there on the screen, you see the QR code. Please take advantage of that. That's why we put that together. Now, as we continue to think about this, Mark, there's something that comes into play with a Roth conversion that sometimes gets missed, and her name is Aunt Irma, right?
Yep.
So tell us a little bit about Aunt Irma when she comes knocking.
Yeah, she is one that a lot of people don't even know she existed, right? She's like the long lost cousin or aunt that you've never met. And when you meet her, you're not going to like her very much, right? Because all of a sudden, based on income, if you get thrown into a higher bracket, it's going to affect your premium on Medicare. I'm dealing with Irma right now, and I don't like that, Ann, at all.
Yeah.
And so, again, based on your income is going to determine, you could go from this year being about $185 a month for what most Americans are paying on their Medicare premium. You could be over $600 a month based on income. So again, this is why we hear about CPAs. I've got a CPA. Well, a lot of times they're not doing really tax planning, and they need to be looking at IRMA, because if you don't do that, it can be devastating. So again, I just want to say, if you're listening today and you've heard our show, think about ways that you are being affected by different taxes. We haven't even talked about capital gains. But the point is, if you're being affected and you don't know what's coming and you're worried about that, pick up the phone and give us a call. We're going to have a conversation. We want to talk to you about your income. What about medical, like we've talked about? Do you need long-term care possibly? What about taxes on your income, and how it's going to affect your Medicare premiums, right? So if you've got doubt and anything that you're worried about, please call 844-342-7142. That again is 844-342-7142. We want to encourage you to pick the phone up. We're going to have a conversation, and you are going to leave your checkbook at home. We're not going to, you don't have to worry about feeling pressure. What you're seeing today on the show is exactly the way it is with Casey and I when you come into our office. So again, we want to help. We're there to help. Casey mentioned taxbillseattle.com, where you can, again, have a plan and use a calculator that's going to give you some ideas as what the potential changes that can happen. So please pick up the phone and give us a call at 844-342-7142.
Thanks a lot, Mark. As always, it's nice being here with you. We love having our audience with us too. We know that many of you tune in every single week, and we want to take a second to say thank you. We love having you here. We appreciate, especially for all of our clients. We have a lot of clients that watch our show regularly, listen to the radio show regularly, or even that come to the financial planning classes that we teach at the colleges. And we appreciate you so much. The little part that we get to play to have an impact in your lives is such a privilege to us. Maybe for the folks at home, if this is your first time viewing, think about this. Do you have a yo-yo plan? YOYO, which stands for You're On Your Own. That's what we see a lot of folks have. They've got a 401k and they've done a nice job saving and building for retirement, but there's really no plan. This is your opportunity. You see the number on the screen, scan the QR code, and as always, tune in next week to see us again right here on Elevate Your Wealth.